Good morning, everyone. This is David Blair, the Crosshairs Trader, and I welcome you to the first day of December 2010. Well, the market is continuing the same pattern we've seen for the last couple of weeks, and that is the pattern of what I call the Lego market, which simply means that we have huge down days followed by up days, dojis up, down, up, and then we've had 3 days of pretty much nothing, a down, a doji, a down, and then today we're looking currently at the futures, NASDAQ futures and S&P futures. We're looking at another big up day to erase the last 3 down days. So that's our Lego market. That's what's going on, consolidation. And as we've been discussing the last few days in our short videos, the market has had a nice run. We've had some candle counting instead of a pullback. We've had more of what would be considered a correction down to a major moving average, and now we're seeing if that support line here can hold. If so, we look for the market to continue another leg up. If it cannot hold in this area, we'll start reversing and going down. But right now, it looks like it's trying to hold. It has hit this support area about 8 days. 1, 2, 3, 4, 5, 6, 7, 8, counting today. But we've also hit this resistance area here on our daily chart. We've hit it 1, 2, 3, 4 days. So we're in a very tight range. We have to keep this in mind as we look at individual stocks. The risk right now would be to trade the downside or to jump in a bunch of longs and we continue in the consolidation. So either way, I would say that the best trade is either to trade lightly or not at all. And if you're going to trade lightly, looks like the better trades would be on the upside, again, simply because we're holding a strong support area. With that in mind, let's take a look at a few individual stocks we've been talking about, and keeping in mind that these individual stocks have had some volatility the last few days due to the market being in this consolidation and correction phase. But Amazon has come back to test a breakout area and is now, looks like, consolidating on its own. This morning it will pop up back to these highs again. So the trend of Amazon may still be in place, and we will keep Amazon on our radar screen. For those watching Amazon, it is bullish, of course. Broadcom, same thing. We've had several crosshairs indicators fire on our daily chart to indicate a trend, and that's what our itch indicator is. We break out of a range and then we start having these itches fire, pull back, fire again. This was a crosshair that fired, and now an itch, and Broadcom will most likely open up today as well and continue the trend. CBE, trying to break out here. And of course, with all of these, if the market decides it's found support and decides to have the next leg up, these stocks will continue to go up with it. CBE is breaking out, looking good at this point. APKT is one that is basically not stopped at all, continues to go up, and we've had several itches on the way up with this trend, and now a crosshair from a few days ago breaking out and continuing to move higher. Nike, and then we're going to look at a couple more. Nike had a nice itch. Again, pull back, break out, move up. If you've been trading in the sideways market, you've had to deal with some pretty much nothing days and manage your emotions on that. Now let's try a couple of new ones. GTI. Several Crosshairs traders had traded this one on the breakout, and now there's another opportunity as it looks like GTI may start a nice trend and continue that trend, as now we've had several itches in a row, and we just had another itch yesterday as it begins to trend for us. Weekly chart looks good too down there at the bottom. FedEx has had a nice breakout after a consolidation for a couple of months. Our long-term moving averages have lined up to give us bullishness. Then we had several of my indicators fire at the same time yesterday. CH71 is a consolidation indicator, could indicate the beginning of a breakout. The itch indicates the beginning of a potential trend, and the CH79 simply tells us that some of our moving averages have lined up where we want them to line up for bullishness. So FedEx has got several bullish signals. The weekly chart also looks good as it heads up toward a high that goes back up here, 121, goes back to 07, 08 area. Not saying it's going to go up there. We still got some resistance, a few dollars up, but the high for FedEx is around 121 from 3 years ago. That could be a target in the weeks and months ahead. All right, those are the ones that we've been looking at, considering the market where it is at support again and bouncing off that support and adding two new ones, GTI and FedEx. Thank you for coming today. Contact me anytime you like at david@crosshairs.com if you'd like to know about how to become a Crosshairs trader. I would be glad to give you that information. Have a wonderful day, both in and outside the charts.